Good morning, everyone. Thank you for joining us, and we're pleased to present our annual results for the period ended 31st of December. Before I start and introduce ourselves, just want to thank the board for a fantastic first year in governing and governance and guiding us to where we are. In particular, to thank the two board members who are departing for executive positions. Jack Waters has been fantastic as a chairman, and Monique O'Keefe. So thank you very much to both of them and the rest of the board. So if I introduce myself, Tor Johnson, I look after D9 and lead the digital infrastructure investment efforts for TriplePoint. I'm joined by Isabel Gunn-Brown, our CFO, and Andre Karahalu, an investment director in our team. So we all know the opportunity. We see it, we live it, we're living it right now. The digitization of our society is real, it's happening, and it's compounding. The infrastructure to support that is what we are focused on. And one of the core messages I want to leave you with is the compounding nature of that infrastructure growth. This isn't linear like a connectivity business of electricity. This is going to continue to grow. If you just look at the number of users coming online in the next 2 years globally, 800 million, and that's growing from there. More devices, even those who are connected already. We're compounding the number of devices that are going to be connected and changing the way those devices are speaking to each other through machine-to-machine learning. And all that consuming more data. We, as users, even in the Western world, are consuming more and more data. Just look at a connected car. 25 gigabits of data created by a connected car per hour. And all that data is also now requiring faster speed and faster latency, given some of the technology and the AI that is going on. Amazon estimates that at 100 millisecond latency costs them 1% in sales. So at TriplePoint, we'll talk about this and purpose and what we are doing differently is about democratizing and decarbonizing that connectivity. We want to invest and build out the infrastructure for a faster, fairer, and cleaner internet globally. Next slide. So at the core of our mission is about, of course, revenue visibility and some inflation protection. That is at the heart of the assets and companies that we're investing in. 4 subsectors, and if I use one of the analogies of the human body, data centers, they are the brains of the internet. That's where the storage and the processing occurs. That's connected to subsea fiber, which is the backbone of the internet. 98% of the world's data is carried by subsea cables. It is the heart of that connectivity between data centers globally. And then the capillaries, terrestrial fiber and wireless network. Terrestrial fiber connecting homes, connecting businesses. Here in the UK, we're at the early start of that journey, surprisingly, particularly relative to Europe. Wireless networks, providing that capillary and connectivity on a mobility basis, and several layers of that mobility, including broadcast and emergency services, small cells, and of course, macro towers. As a whole, when we look at a pro forma target composition of our fund, we are looking at a blended basis across those 4 subsectors. That is at the heart, ultimately, a belief that having exposure to all 4 asset classes here, and just the way we're defining it here today, ultimately provides a blend, an interesting blend of risk and return across these different parameters. But there's also another benefit as we think about the value chain, and that's within telecoms, there is a connectivity and enhancement of value across this portfolio. And it comes back to that compounding theme I mentioned. As we continue to see the opportunity set compound, the more we execute on that, the more the opportunities will start to compound across this value chain. Next slide. So just to take a step back and share with you the past year. It's been a very busy year. $845 million raised, $630 million deployed. If I describe it in terms of investments, 3 platforms. Initial investment in a subsea fiber network platform with Aquacomms. That's made a follow-on investment into a new network between Europe and India, that we call EMIC 1. Verne Global, a Nordic data center platform, that also has made a follow-on investment into further capacity at its site next to the Keflavik airport in Iceland. And finally, a third platform, it's at the early days, we've made an initial investment into an asset here in the UK with a long-term lease associated with it. And through that period, we've been committed to paying that dividend. Next slide. At the core of who we are and what we're doing and is this SDG 9. It's in the name, D9, and it is around 2 aspects in principle around that SDG 9, that UN Sustainability Development Goal number 9. Increasing connectivity to the internet, of course, that is at the heart of a lot of the features of our investment. Also doing that in an environmentally sustainable way. And the big subset there is decarbonizing digital infrastructure. And we're doing this all from an ESG standpoint in a very attractive way. When you compare our carbon footprint relative to the US average, you look at 19 tons of carbon relative to 173. If I just touch on 2 of the platforms, Aquacomms and Verne Global. Aquacomms are continuing to build out and improve connectivity, 32,000 kilometers. So if we include EMIC 1, driving connectivity to countries with low internet penetration. So we're really driving that connectivity part forward. Verne Global, at the heart of their mission is decarbonizing the data center industry, migrating data center capacity, the energy sink of that data center capacity, from a net hydrocarbon market to a net renewable market. Significant cost benefits there, yes, for a company making that transition, but ultimately significant environmental benefits. And you look at the carbon footprint, the emissions footprint of Verne Global relative to a UK data center, looking at 1.6% of the emissions of a UK data center for the equivalent. So we're quite proud of that, and we're going to continue that journey as we think about our broader pipeline going forward. And now I'll pass on to Isabel to take us through the financial overview.
Thank you, Tor. Good morning, everyone. I'd like to talk you through the financial highlights for the first 9-month period since IPO. The NAV per share at the 31st December was 104.62 pence. This is an uplift since IPO of 6.8%. During the 9-month period, we've declared dividends of 4.5 pence, which is in line with our target annualised dividend of 6 pence. The market capitalisation at the 31st December was 822 million, which is a 9% premium on NAV. And our IFRS investment valuation of 746 million includes 486 million of investment and 250 million of cash. Total shareholder return annualised is 23.1%, which is calculated on a share price performance basis, assuming that dividends are reinvested. And the total return for the period was 9.82%, annualised 13.1%. Our earnings per share of 9.77 pence is calculated on a weighted average number of shares during the period, and the ongoing charge ratio of 1.04% is below the target set at IPO 1.5%, and this is primarily due to the investment management fees only being taken on deployed funds. This is expected to increase as we deploy the remaining cash of 250 million. You could turn the page, thank you. So the statement of comprehensive income shows a fair value gain on financial assets of 45.5 million. This includes an uplift on the Aquacomms valuation of 15% and an uplift on the Verne valuation of 11%. Adding in the distribution from Aquacoms during the period of 2.9 million, our total income for the 9-month period was 48.4 million. Acquisition expenses are the transaction cost for the seed asset Aquacoms, and the ongoing charge ratio of 1.04% represents the operating expenses of 12.6 million. This provides a net profit before tax of 38.3 million, which is equal to our earnings per share of 9.77 pence. Dividends declared during the period of 4.5 pence, expressed as a percentage of our operating cash flow on a look-through basis, were 39.6%. We expect this to increase as the remaining 250 million cash is deployed during 2023. The underlying investments have retained their surplus cash during the period for reinvestment rather than distributing it up to D9. Turn the page, please. So looking at the statement of financial position, investments at fair value of 746 million, as I've said, this is the company's investment in Digital 9 Holdco and includes 486 million of investments and 250 million of cash. Cash and equivalents remaining in the company of 11.3 million is to cover working capital, and the net assets of the company are 756 million, which is represented by a NAV per share of 104.62 pence. Turn the slide, please. So the total return for the period of 9.82%, as you can see, is made up of the NAV growth since IPO plus dividends paid during that period of 3 pence. Annualised, this is 13.1%. And on the final slide for the financial overview, you can see the net asset value bridge, which shows the growth in the NAV since IPO at 98 pence, adding in profits, which includes the valuation on the investments, adding the accretion in value from the follow-on equity raises, and reducing by the dividends paid to give us our NAV at the 31st December of 104.62 pence. Thank you. I'll pass you on to Andre, who's going to talk through the portfolio performance.
Thanks, Isabel. Next slide, please. As a reminder, Aquacoms, this was our first investment the day after IPO. It's one of the leading owner and operators of subsea fibre in the transatlantic market. They've got 20,000 kilometres of subsea fibre systems in operational development and 100% availability since launch. This is key. These are modern systems. They're at the forefront of what they do. And because they're modern systems, they're inherently upgradable. They have very high availability, as I said. And they're developed in partnership with the biggest procurers of digital infrastructure capacity globally, namely Google, Facebook, Microsoft, and some of the other FANGs and global telco carriers. So 95% of the revenues come from global tech and global telecoms, very creditworthy counterparties. As are the most modern cables, the significance of that is that a lot of the legacy cables that were deployed in the early noughties are coming to the end of their useful lives of about 25 years. And so by the mid-2020s, there'll be a 40% capacity shortfall in the Atlantic market. And Aquacoms, with some of the newest cables, will be well placed to benefit from that. Next slide, please. As a result of those partnerships and relationships with those large procurers of digital infrastructure capacity, we were invited onto a new cable system by Meta. This is a new cable from Europe over the Middle East to India. We call it EMIC-1. It very much aligns with what Tor was saying about the UN Sustainable Development Goal number 9, improving connectivity globally. In this case, this cable will connect 3 billion people on this route. India already has the second largest number of internet users in the world. So it's a very exciting opportunity for us to expand eastwards. And that's a theme that we'll come to in the future. And wherever we expand our subsea network opens up new opportunities for us to invest in digital infrastructure. And we'll touch on that when we come to the pipeline slide. Next slide, please. Verne Global was our first data center acquisition. This was in September. It is the leading enterprise data center in Iceland. It's a specialist in a subset of data centers called high performance compute. These are the most energy intensive computations in the data center space, and consequently their customers are at the cutting edge of data analytics, whether that's from AI and machine learning and protein sequencing, for example, through language translation, through to automotive as well, with BMW and Volkswagen being two of their most prominent customers in optimizing their manufacturing processes. The key with Verne Global is that it is ultra low cost. Iceland has the lowest power prices in Europe. Verne can offer an 80% power cost saving relative to continental data centers. And they also have a 10-year PPA with the national grid equivalent. And importantly, Iceland has 100% renewable power from the grid, and not just renewable, baseload renewable power. This is from geothermal and hydroelectric primarily. As a result of that, Verne, and also because of the geographical advantage of Iceland with 360 days of free cooling, Verne has one of the lowest PUEs of equivalent data centers across Europe at 1.22, well below the European average of 1.47. And from a D9 perspective, and from an investor perspective, it's a very scalable facility. When we acquired Verne Global, it had 24 megawatts in operation. Due to accelerated customer demand, they've filled that capacity, and we announced a follow-on investment of £68 million in January to build out to 40 megawatts. So Verne, I'll touch on that in a couple of slides' time, but Verne has performed very well in the short time that we've owned them. Next slide, please. Our final investment in 2021 was into Sea Edge UK1. And it's worth pointing out that all four of these investments were things that we identified in the IPO pipeline in the prospectus. We executed on throughout the year. And even beyond that, they were all bilateral transactions. When we talked about how we were proposing to move into data centers, we said that we were going to leverage the connectivity and the customer base of our subsea network. And we would look at two different types of data centers. The first would be Nordic data centers, such as Verne Global, and the second would be landing station data centers. These are points where the subsea fiber comes ashore and meets the terrestrial fiber backhaul and network. And they become points where customers can get ultra low latency access to that international fabric of connectivity. In this case, there are two subsea cables that land at this facility. One is the North Sea Connect cable that's owned and operated by D9, it's Aquacoms. The other is the NA-UK cable that's operated by Aquacoms, but both plug into D9's North Atlantic Loop subsea fiber network, which unites all of our long haul, those 7,000 kilometer long cables, transatlantic cables, together with the short haul routes. And what that means is from our data center in Newcastle, we connect England to Denmark, Norway, Ireland, and the United States of America. So it really does tie in with that UN Sustainable Development Goal 9. Next slide, please. So Aquacoms throughout the year, their revenues are up 10% year on year. EBITDA is flat year on year at 17 million. The reason for that is there were some permitting issues with 3 of the cables that were coming online at the back end of the year. 2 of those have now gone live in Q1, so those revenues will be coming online in short order. Important to note, when I talked about the modern cables, Aquacoms completed a world first in 2021 with a 400 gigabit Ethernet connection between New York and Frankfurt in partnership with Telia Carrier, who are now called Aurelian. Next slide, please. Verne Global has performed outstandingly well during 2021. They've outperformed their budgets by 25%. Revenues grew 80%. EBITDA has risen to 22 million. As I mentioned, they've already filled all the capacity, which led to our £68 million follow-on investment in the face of that accelerated customer demand. The EBITDA now is at 15 times compared to the 20 times that we paid on acquisition. Next slide, please. In terms of valuation, that means Aquacom's valuation since acquisition has gone up 15%, and Verne Global has gone up 10% in that time. So that's £487 million total investment values, an uplift of about 12% in total against the invested capital of 435 million. And how that looks overall at a fund level is, and we talked about this earlier, that the commonality between the 4 subsectors that we're looking at is long-term contracted inflation-protected income. So when you look at the 3 operational assets, EMIC 1 will be coming online in 2023 with first revenues Q1 next year. But the three operational assets have an average 7.1 years of contract length. And the recurring revenues, 83% of them are inflation protected to some extent. 70% of that is fixed uplift and 13% is CPI or RPI linked. Next slide, please. And I'll pass back to Tor for the outlook.
Yeah, thank you, Isabel. Thank you, Andre. Next slide. One of the things we've talked to investors about is the debt facility. So we are completely unlevered as a business, all our assets. And so one of the first steps we talked about in implementing a more appropriate capital structure was to put in place a RCF. And as you'd have seen, we announced it earlier this week, a 300 million committed facility, RCF, from the banks there listed. That has a feature to expand that up to 500 million with the accordion feature. So we're quite excited about that. A great step in implementing a more appropriate capital structure for an investment trust, given where we are and on a size basis. And you can see the other terms there. Next slide. So if I now just take you through just where we are on a cash flow per share basis, you'd have heard Isabel comment on just the current cash flow per share. First, just to touch on currency as a portfolio, we're quite happy about sort of the exposure between dollars, sterling, and euros. But when we look forward, and one of the messages we want to convey with this is the opportunity within the platforms. So we've talked about the debt, so using that debt deploying, bringing in some leverage into the capital structure, the accretive effect of that. But Verne Global, so if we add another 40 megawatts and contract out that capacity, that would add, there's an accretive effect there, and that's just because there's, of course, a development uplift between what you develop an asset at and what you contract it at. Similarly, with Aquacomms, a very similar story. The business is scalable. We continue to see, as we invest in new network, there's an accretive effect for the overall platform. And then finally, when we look at the immediate pipeline perspective, getting it to that level, we end up with quite an attractive cash flow per share. So again, this is all illustrative. It's just to show you the benefit, the compounding effect of the existing platforms, but also the attractive pipeline that we have in the mix. Next slide. So if we think about valuation, Andre talked about the valuation and how we do that, and there's more detail on the slide. But if we looked at it relative to comparable multiples out there in the market, and this isn't how we value the business, just to be clear, Andre mentioned it's a DCF basis. But if we were to look at that, it would give a significant uplift to that NAV per share. And the reason why I emphasize that is because ultimately, that is the value of the platform. If you were to go by, so these comparables are all recent, within the last 6 months, and the best comparable for each business, both Aquacomms and Verne. And the exciting thing about that for us is it's reflective of the value of that platform that we can continue to drive that accretive growth in to that development to sale premium and uplift. Next slide. So if I touch on pipeline, and there are 3 aspects of why you can see that we're quite happy and pleased about the platform continues to compound. It is a pipeline effect. Not all of these will happen. We do say no a lot. We find that quite a few opportunities are bilateral. Andre mentioned all 3 assets. We talked about it at IPO, but all were bilateral. And we continue to see some effect of that, but we will participate in some auctions too. Next slide. So if I talk about just why are we confident on the pipeline? And a couple reasons. And I'll first start on the right, platform. Verne and Aquacomms and now the Sea Edge platform will continue to grow and compound new opportunities for investment, accretive investment to the original investment. And we're quite excited about that. And those will continue to drive interesting opportunities in their own right. However, of course, we're going to be looking at other platforms to add into the broader the broader fund. Secondly, I'd say purpose. And this is, quite frankly, I wouldn't have identified this at the time of IPO as a source of value with respects to the pipeline. But what we're finding is that because we are looking to be different, we are setting out and saying we are doing something different and aligning to SDG 9. That's allowed us to filter opportunities in a unique way, like looking for companies who lead on that decarbonization of the data center industry. That filtering and focus around that target purpose brought us to Vern. But we're also finding that agenda, that purpose that we're aligning to ultimately is bringing assets and opportunities to us. So finally, people. And we've referenced this before, we are a focused fund. All we do is digital infrastructure. We live and breathe it. That focus on the value chain and that network effect that continues to compound is quite accretive to the pipeline. So 300 billion now of digital infrastructure experience in the broader group. And that is a key KPI for us, and we're going to continue to compound on that growth of experience set as we attract people, attract talent into the broader fund, and look for new opportunities. But that people, it's not just Rolodex; it's also the ability to assess opportunities that come to us, and then decide what to go after, and filtering down into where we spend our time and resources. And of course, also that people side and the value of those platforms compounding in the relationships with the biggest customers in the space. Ultimately, also filtering new opportunities as to where we can invest, like EMIC 1, both identifying it as an interesting opportunity, but also having the opportunity come direct to us. So overall, we believe that the pipeline will continue to grow and ultimately delivering strong shareholder return.